Exercise 922. And it says to do conventional, and conventional is also what? An approximation of lower cost of market. So you got to remember that conventional and lower cost of market are the same thing. And then they say LIFO. That's another opportunity, right? So this is LIFO. This isn't dollar value LIFO. This is just LIFO. Is that right? Okay, good. And then there's one other possibility, which would be what? Unfortunately, it's just called what? A retail inventory method, but it's really an average, right? So let's do all three of them, even though the problem doesn't ask for that. Let's do all three, okay? So we'll do average, okay, which is just this regular retail, I guess, okay? And then let's do conventional, which is also lower of cost or market, right? And then let's do LIFO. Let's look at the difference between the three of them. So what's the key thing here? This is retail inventory method, so people are counting their inventory and they're writing down the retail sales price and they know their total inventory or retail sales price, right? That's the deal, okay? And of course they keep track of all their purchases and their sales, okay? So that's fine, okay? And these would be people typically that are using what sort of inventory? Perpetual or periodic? More likely periodic, because if you're using perpetual, you'd already have an estimate of your inventory, right? You wouldn't bother with this. It's like it. Okay, so good. Anyway, in the authors in the book said there are some folks who are doing this, like Target, people like that. Okay, so what might you do here? How would you approach it? With all three, what are you going to do? Set it up how? What would you do with this? Got a blank sheet of paper. What do you want to do on it? Yeah, start with the beginning inventory. Okay, at what? Cost and retail. I mean, they gave it to you in the problem, and they typically will. It could be in a paragraph, but who cares? We can pull it out. Okay, beginning inventory at cost is 38.1. At retail is 60,000. Could we get a cost or retail percentage on that? Yes, and we're going to use it if we do LIFO, aren't we? But let's do it anyway. What's 38.1 divided by 60,000? It's useful to see. Cost or retail? Just a percentage, right? Just the cost divided by the retail. What's that at the beginning? That'd be year-end last year, huh? How much is that? 63.5. Good. We're doing exercise 923. All right. So, yeah, if I was going to use LIFO, I'd need that information. I don't need it otherwise, but it's still good to monitor what's happening to your gross profit percentage. If that's the cost percentage, what's the gross profit percentage? 100% less 63.5, right? Everybody got it? All right. Then what do you want to do? Add our purchases. And do we know cost and retail for those two? Yes, we do, because we know what our markup is on our standard purchase, right? That's all it is. So it's 130,900 is the cost, and 178,000 is the retail. Divide 139 by 178. What's that? 73.5. Man, their plan for this year is strange, isn't it? After 63.5 last year, 73.5 this year, they're letting their gross profit go way down, aren't they? Gross profit margins go way down. And maybe it's going to increase the volume of sales or something, right? Hopefully they did it on purpose, right? Or maybe their cost is just getting out of control and they can't raise the sales price fast enough to stay with it, right? You're going to use this stuff to run your business, you guys. Okay, then what do we do? We got markups and markdowns, right? Okay, so if we're going to, let's start with the average. If I'm doing the average, what would I do? Include both, right guys? And if I'm not doing LIFO, what am I going to do? Include the beginning inventory. If I'm doing LIFO, I'm going to leave out the beginning inventory, right? That's it. Okay, so let's start with average. So we got our purchases, but by the way, what if there was freight in? added to the purchases. Right, guys? So all those little things that they talked about in the chapter we went over last time, adjust for whatever they are. Right? Okay, so taxes and duties or whatever. Okay? All right, so all they did in this problem is they just gave us purchases, and they gave us the markdowns net. What does that mean? It's the markdowns less the markdown cancellations, right? And they gave us markups net. What would that be? The markups less the markup cancellations. So you can always net them, right? If they don't net them for you, do it yourself. Okay? No big deal. So why do the markdowns only and markups only relate to retail? Because you don't change what you paid for it because you mark it up or mark it down. It changes what you're going to sell it for. That's the retail sales price, okay? All right, so just let this be common sense. So what do we want next after purchases? Maybe markups? Put them in any order you want. Just remember when you're doing conventional to take out the right one. Markups would increase the sales price by how much? 22,000. What did that just do to our cost of retail percentage? Made it smaller, didn't it? Changed it. Everybody agree with that? Didn't make it smaller because I'm adding 22 to the 178 and I didn't add anything to the 138,900 or 130,900, did I? Okay, and then what about markdowns? Net. Just the reverse, right? I'm going to subtract, what is it, 13,000? That's all there is to this. It's not a big deal. Okay? Is there anything else? Well, there's sales, and the sales is going to come out of the retail to come up with our inventory, isn't it? But what do we want to do first if I'm doing the average? Yeah, get our ratio. So we're not going to use this ratio. We're going to use that one combined with everything we bought, right? When we're doing the average. Everybody see it? It's going to be combined in. It's going to be an average, okay? So what do we have for total here? Total available, I guess you could say on this line, huh? 38.1 plus 139 is how much? 169,000. And then we'd add 60 and 178 and 22, and we take away 13, right? What are we going to sell that $169,000 worth of product for? That's what we're suggesting here. 247. So what is our cost as a percent of our sales price? Take 169 and divide it by 247, and what do we get? Okay, now that is what I am going to use as my cost to retail percentage, right? For determining my ending inventory. Then all you have to do is take away your sales, and it'd be the net sales. What does net sales mean? Sales less sales discounts less sales returns and allowances, right? Now, if there were sales returns and allowances, though, what would we have to do? Take those out of retail, right? And if they're returns, take them out of cost. You guys with me? They reduce your sales and you put them back into inventory, basically, is what's happening. Yeah, you guys with me on that? Purchase returns and allowances would only hit what? Cost, because it doesn't, wait a minute, purchase returns and allowances hits both too, yeah. Returns do, allowances don't in both cases, okay? Yeah, all right. So we got the 64, so let's take away our sales. How much is it? 167, we're still in the same problem. And what do I have for ending inventory? At retail sales price, 80,000. And what you want to do is you want to calculate ending inventory at cost. This is the number you want to put on your balance sheet, right? What do? Take 80,000 times 68.4 and you've got it. Do it in that order. Don't calculate the cost of goods sold. Don't take the 167 times the 68.4. Here it'll work fine because it's average. But with conventional, it'll screw you up. Don't go that way. Okay? Or I'm sorry, with LIFO, it'll screw you up. Don't go that way. Okay, so what's 80 times 68.4? So if I cleverly ask you for cost of goods sold, could you calculate it? That's the sales over here. This is the cost, of course, right? Cost of it. What's the cost of the goods sold? Take 169 less 54,720, and what do you get? It, isn't it? This is what's available, right, at cost. This is what I have left at the end at cost. That's my estimate of it. What do I get? 280. Ta-da. Are we good? Now, if you wanted to show, instead, we wanted to show conventional lower of cost or market, what would you do? So let's give conventional lower of cost or market a shot. Okay? So now we'll do that. Right here. Conventional or lower of cost or market. They'll call it one or the other, right? What's different?
You do not add your markdown, get your cost ratio.
Yeah, the only thing is you're going to leave the markdowns out. Are you going to still use the markdowns? Yeah, you got to use it to get to the ending retail inventory, right? Still got to take it out. We're still going to get the same ending retail inventory in this little example, right? But we're going to have a different retail percentage, which then is going to give us what? A different ending inventory. Is it going to be higher or lower, seeing as it's a lower cost or market? It'll probably be slightly lower, right? Okay, that's what's going to go on. You get a more conservative estimate of inventory. What's that going to do to your cost of goods sold? If your ending inventory is less. Cost of goods sold is more. That's it. Okay, so let's do exactly the same thing. So if I gave you all these on a problem, big deal. Cost, retail, or cost and retail, and then the percentage cost divided by retail. Cost retail percentage, of course. Okay? Beginning inventory, all you got to do is list them. 38.1, same as I had before, right? Same as I have up above there. And then, yeah, that's 63 and a half, but we're not going to use that anyway. You're going to put in your purchases, and what do you get there? 130,900. 178,000. It's no big deal. You're going to put in the markups? Yeah. When you put in the markups, that's making your cost of retail percentage less. So that's how you don't have to remember which one to leave in. It's going to make your cost of retail less, which is going to give you a more conservative inventory, right, guys? Sure. And if I put in the markdowns, that's going to make the cost of retail percentage higher and give me a less conservative estimate. That's the average. Got it? Okay? So just leave that one in, and it is 22,000. And now at this point, I come up with a new, I guess, total available, if you want to think about it that way. Total available, but only including the markups, not including the markdowns. And I still get 169,000 when I add those two together. Is that right, guys?
Yes.
And then I'm going to get 13,000 more. What will it be? 260? I'm going to get 13,000 more because I didn't use that 13 there, right? That's all it is. What's the cost of retail percentage this time? 65 even? Okay, they made the problem work out nicely, didn't they? So you can see 68.4 is going to give you a different inventory than 65. Huh? Big deal. Okay? So then what do? I take my sales out of there. My sales are still 167, I think. And I will have what? A new ending inventory. What's the ending inventory? Instead of being 80, it is 13. Whoops. What did I do? I screwed something up. Monkey. What do I need to do, you guys? I screwed up. It's got to be the same. You better put the markdowns in here, huh? Okay. So when I do the markdowns, what's going to happen? How much is the markdowns? 13. Yeah. Okay. That looks better. So when you take away 13 markdowns and you take away 167 sales, what do you end up with ending inventory? 80,000. It's got to be the same ending inventory. Yeah. Okay. True? So the only difference is the 13 up here came out before you got your percentage, right? Cost of retail. And here the 13 is coming out after you get your percentage. That's it. That's all you got to keep straight. And read the question carefully. What are they asking for? If it just says retail method, they mean the average. I'll try to fix that in problems I give you. Call it average. Okay? If they say conventional or lower cost or market, it's the same thing, right? Okay? We do it this way. So now what do? You take your 65% times 80,000, and what do you get? What's 65% of 80,000? 52.5?
No, just
52 even. Okay. All right. That is my what? ending inventory at cost. What's my cost of goods sold? 169 less 52 is how much? One what? Okay. What if you took 167 times 65%? What would you get? $167 is the sales, 65% is my cost of retail percentage. What would you get? Is it 117? No. Why not? Because that 13's down below there too, huh? So you have to be careful to take the cost of retail percentage times the ending inventory, not times the sales. Yeah. Okay? So do it in that order. That's the point I made earlier. Okay? No big deal. All right? Let's try LIFO then. What's LIFO going to look like, guys? Now we're doing this. What's the only difference we're going to do? It's going to be very similar to the average, right? Except what? Separate the beginning inventory and keep that LIFO later, okay? So this really solidifies LIFO versus FIFO stuff, doesn't it? Okay, which for the dollar value LIFO earlier too, for that matter. Cost, retail, cost divided by retail, obviously the retail cost percentage, okay? Beginning inventory and separated. So the beginning inventory was what? 38.1 at cost. What was it at retail? 60,000. What was the percentage? 63.5. This time, do you need that percentage? Yes. If I have an inventory of 60,000 or less, my inventory is at 63.5, right? If I have more than that, I'll use the 38.1 as my first layer, right? Which is still the 63.5%. And then I'm going to have a different cost for the new layer for the new year. Okay, that's it. So my purchases are still the same. My beginning was the same. My purchases are the same. Everything's going to be. My purchases are how much? 130,900. Everybody staying with me? Cost is 178,000. Not a big deal. But we're going to have to put in our markups and markdowns. This is an average method with LIFO. If you wanted, you could use a LIFO with lower cost or market, couldn't you? Right? You could. Just, what would you do? Only include the markups, don't include the markdowns in the new layer, huh? And then do it every year? I won't ask you to do that, but you could if you wanted, okay? So this is really a LIFO at average, okay? So what we're going to do then is we are going to add in the markups. They're the same markups, no big deal. 22,000, are they? We're going to add in the markdowns. Subtract them. They're 13,000. Good. And then we're going to get total added this time. You get that? It cost me 130,900, and what do I think I'm going to sell those for? That's 187. 178 plus 22 less 13. What's my new cost of retail percentage? So everybody see what we're doing here. That's the new year's, right? So now I got two layers. Inventory. Okay. Good. Okay, then what? Yeah, you better add them together. That's your total available now. What are we getting? 130,900 still, right? Whoops. Add the 38. 38.1 plus 130,900 is 169. It's the same 169,000 we had on the other two, isn't it? Yeah, on the two methods. And how much is the total retail available? 247, which is the same as we had up here, right? Everybody agree? Take out your sales. And it's still the same ending inventory. It's a miracle. Okay, so here we go. Ending inventory is 80,000. But now what do you want to do, guys? You better do your layers. So that 80,000 consists of what?
60,000 beginning.
60,000 beginnings. So take away your beginning now, but you can think about it, which is worth, by the way, 38,100, right, guys? Their cost, 38. There's your beginning inventory, okay? So what do we have left then over here? 20,000 for the new layer, right? Times what? 70%, which is how much? Okay, so now we got it made, don't we? That 80,000 total inventory then is going to be what on your general ledger and in your financial statements? 52,100 is the LIFO inventory, okay? So you can see the ending inventory is 54,720 if you use average. It's 52,000 if you use lower cost or market, conventional, and it's 52,1 if you use LIFO, huh? Okay? What would be my cost of goods sold here? What would be my cost of goods sold now? What do I have? 169 available? 52,1 is my ending inventory, right? This is the ending inventory total. 52,1. What's my cost of goods sold then total? Yeah, 169 less 52,1 is 116,900. Obviously, if you change your ending inventory, you change your cost of goods sold by exactly the same amount you changed, right? These are easy, aren't they? Kind of. Just trying to keep them straight is the only thing. Okay. Any questions about those three? Work all right? And you keep them straight? Maybe I'll just give you one full-blown problem. You get to do all of them. Might on a take-home test, I suppose. Okay.
Are you putting that cost of goods sold on the ending inventory or above, like where the
No,
sales is?
it's on the line with the sales. That should be on the same line as the sales. Okay. Right, sales are 167 and the cost is 116.9. Just like here, let's see, the sales are 17.
That's what I thought. I just
Yeah, the cost of
where
goods
you
sold
wrote it.
117 here, right? Yes. Yeah, it's only 100 different in inventory, so it's 100 different cost of goods sold. And then the same thing here. 114, 280. Yes.
Can we do problem on
Problem then. Sure. Well, gross profit method. If we run out of time in the review, we'll do a LIFO, dollar value LIFO, one of these. Okay. Yeah. Doesn't matter what we use. Let's get rid of the. Whoops, not good. All right, so let's take a look at this one. Gross profit method. On April 15, 2015, fire damaged the office and warehouse of Stanislaw. The only accounting record saved was the general ledger from which the trial balance below was prepared. And I see inventory of 75,000 on there, right? So, problem 5. The fiscal year of the corporation ends on December 31st. Okay, great. This is the trial balance as of March 31st, isn't it? Okay. An examination of the April bank statement and canceled checks reveals that checks written during the period total 13,000, 5,700 paid to accounts payable, and 3,400 for merchandise shipments, and 3,900 paid for other expenses. Deposits during the same period amounted to 12,950, which consisted of receipts from customers on account, except for 950 refund from the vendor for merchandise returned. Correspondence with suppliers revealed unrecorded obligations of 15,600 for April merchandise shipments, including 2,300 shipments in transit, FOB shipping point on that date. Customer acknowledged indebtedness of 46,000 at April 15th. It was also estimated that customers owed another $8,000 that will never be acknowledged or recovered. Of that acknowledged indebtedness, $600 rather, will probably be uncollectible. The companies insuring the inventory agreed that the corporation's fire loss claim should be based on the assumption that the overall gross profit rate for the past 2 years was in effect during the current year. The company's audited financial statements disclose this information. It shows the sales, purchases, beginning inventory, ending inventory. Holy cow. All right. So I guess we could probably get a gross profit out of that stuff, don't you suppose? Inventory with a total cost of $7,000 was salvaged and sold for $3,500. The balance of the inventory was a total loss. Okay, how much was your inventory loss? What do you need to know?
What your inventory was
For the loss?
Yeah.
Okay. So it's going to be like this. Inventory, right? Beginning, plus your purchases, less your cost of goods sold, should be the ending, which then must have been lost, right? And at the end, whatever it should have been, compared to the amount they did have, what they sell it for at the end, guys? What they get for it at 7. It had a cost of $7,000, was salvaged and sold for $3,500. So at the end, what was not destroyed totally cost $7,000, and they recovered $3,500. Okay, everybody agree? So the difference between the ending that we think we should have had and which one of those numbers is our loss? Is our loss going to be the difference between what ending should have been and 7,000 or what ending should have been and 3,500? The recovery. Yeah, the recovery is the one that matters, right? Wasn't worth 7,000 at the end because it's fire damage, right? So probably our insured loss, right, is going to be the difference between 3,500 we collected and whatever we should have had. Okay. So do you know anything about the beginning inventory? Do you know anything about the purchase? Do you know anything about the cost of goods sold?
Inventory 75,000.
Okay, and what date was that?
Wait, there's December 31st.
You want 75,000 beginning inventory, or you don't want 75,000? Did you notice this is AICPA adapted? The kind of stuff you're going to face. So what do you think? It was 75,000 on December 31st. Have they taken inventory since then? They haven't, have they? What kind of method do you think they're using for their inventory? Periodic, I guess, right? I mean, if at March 31st trial balance you still have the same inventory as you did December 31st, 2014, they're periodic, aren't they? Right? It's good to know what periodic is. So, yeah, that's the inventory that's on the books. So, what portion of the year's purchases do we need? Only April's or the whole year?
Whole year.
Whole year, you bet. The loss is on April, what, 15th? But we need the whole year's purchases, don't we? January 1st through April 15th. And then what cost of goods sold do we need? Same period. Okay. What could you do to get your purchases?
We have purchases on your trial balance to start off with.
You have purchases in your trial balance. Oh, cool. What's that through? March 31st. All right. So, if you think about a purchases account, so we can put it in here, right? Through 331, they did keep track of purchases. Of course they would. It's going to be in their general ledger, right? They just don't call it inventory. So we have 52,000. So then all we need to add is what? 15 days purchases to get through April 15th. Everybody agree? Because we want purchases at 4/15. So what would you do?
His correspondence with the fire revealed unrecovered obligations of April 15th of $15,600 for April merchandise shipment.
Okay, so you don't want to do anything with number 2. Checks written were 13, 5,700 paid accounts payable, 3,400 was for April merchandise shipments, 3,900 other expenses. About that. Deposits during the period were 12.5, receipts from customers, and 950 refund for merchandise purchased in April. We go ahead and do 3 first, but do you need to? It looks like you do. There's some stuff happening to purchases. And we don't have to just do purchases. What do we need for cost of goods sold? You need sales. So what if we did purchases and sales both at the same time, huh? Because sales times the cost of goods sold percentage is going to give me what? Cost of goods sold is a percent of sales times sales is, guess what? Cost of goods sold. That's how you're going to get there, isn't it? So let's do sales at the same time. All right. So we can start with 3. We'll go back. Correspondence, what do you want to do with that? They said an unrecorded obligation of $15,000 for April merchandise shipments, including $2,300 in shipments, FOB shipping point on that date. These are from suppliers. What do you think of that? That includes the $2,300 though, right? So it's 13,300 plus 2,300, isn't it? 13,300 has been delivered and 2,300 still on its way. You guys agree with that? Am I reading it right? So what do you want to do with that 15,600? Give me the journal entry. You guys want to do? Yeah, but it wouldn't be inventory, it'd be purchases, right? Absolutely. So 15,600 comes in here, and then wouldn't that go to accounts payable? By the way, do we have an account payable balance? We do, don't we? 23,700. So it's 23,700 on the books, and we just added 15,600 to it. Everybody agree with that? That would have been at March 31st, and they'd add more. Okay, I'd buy that. I like that. Okay, so you can check off 3, I guess. And then what else do you want to do? What account goes with sales, by the way, if accounts payable goes with purchases? And sometimes I debit cash and credit sales. Other times I debit. Yeah, accounts receivable. Accounts receivable might go with sales, huh? Make it think through a little bit. What did I start with in accounts receivable? 40,000. Oh, by the way, is there a balance in sales so far? Of course, 135. You guys agree with me? We went to sales now, right? These are March 31st, and we went to sales to April 15th. Okay, now what? You guys want to do another one? Let's give number 2 a shot. An examination of the April bank statement to cancel a check revealed that checks written during the period totaled 13,000. 5,700 paid to accounts payable. So what we do is we credit cash, and then we debit what? Accounts payable. That's going against this 23,700. So 5,700 was for that. You guys agree with that? It's paying off some of that 23,700. 5,700 got paid off. And then, let's see, 5,700 paid to accounts payable as of March 31st. 3,400 for April merchandise shipments. So what's that? There's open invoices of 15,600, but they also paid another 3,400 debit accounts payable and credit cash, right? You guys agree with that? 3,400 for April shipments, right? Did we ever put that into accounts payable? We haven't recorded any April shipments, have we? So they say open invoices are 15,600 in the next one, right? Is that right? Unrecorded obligations, they haven't been recorded. So did this 3,400 that has been paid get recorded? Sure it did, but we don't know about it, right? Because we only have the balances of March 31st. So I think you'd probably have to put another 3,400 in here, don't you? Because they'd have to credit here for 3,400 because the thing got paid, right? Had to get in to get paid. That makes it tough. Okay, so you got 3,400 more coming into purchases. And then 3,900 for other expenses. That's credit, cash, and debit what? operating expenses. It has nothing to do with cost of goods sold. We don't have to worry about that one at all. Wow. And then it gets worse. Deposits during the period are $12,950, which is receipts from customers, right? But there's also a refund from a vendor. So I'm going to debit cash $12,950, right? And I'm going to credit what for $12,000? Accounts receivable. You guys agree with that? That's going to come out of here, right? 12,000, and then the 950 is going to come from where? Refund from a vendor for merchandise purchased before. Where do you want to put that one? That's a purchase. Yeah, so where do you want to put it? I have less purchases at 950. That's purchase returns and allowances, right? Oh my, I bet that one goes there. Don't you think? Is that what the author did with it? You look at the answer.
They take out shipments in transit, and when I was working this problem, I couldn't figure out why, because it belonged to them. But then I realized as I'm looking at this, they take it out because they have a box that is fire.
Oh, it's still coming. Yeah, we gotta do that.
So we haven't done that, and so it just dawned on me why they would.
But what do we have to do? If we recovered 3,500 and we still have in transit?
We would take it out.
Well, you can add it here, right? How much was the in transit stuff?
2,300.
2,300. Yeah, that's great. Yes, absolutely. So the amount that we have left is 5,800, huh? You're right, we didn't lose it. I didn't pick that up either. Okay, yeah. Right? You got 3,500 that you recovered, and then you have 2,300 that's going to be delivered to you. Yeah, so either way, you need to take it out of your purchases. But it is a purchase, right? It is a purchase, but still own it. Yeah, so you bet. So they didn't show the accounts and stuff. Okay, all right, good. So then what else do we have? Customers acknowledged, is that where we're at? Customers acknowledged an indebtedness, right, of $46,000. It was also estimated that the customers owed another $8,000 that will never be acknowledged or recovered. So what do you want to do with that? What were your sales really? And by the way, is the sales insured too? They're asking us to calculate the inventory fire loss. Are the sales going to be covered by the fire loss if we don't collect the receivable? Or is that a different issue? What do you think? Is your insurance going to cover customers who don't pay you because they don't acknowledge they owed you money? No, I would think so. That's a separate loss. That's going to be bad debts. So what's our sale really going to be? We want to get the sales. Our customers acknowledge they owe us how much? 46,000. And how much are we never going to collect? Another 8, right? Has not been acknowledged recovered. Of the acknowledged amount, 600 is probably not going to be collected. So there's 54,000, right? Total. Everybody agree with that? So our ending receivable should be 54,000. You guys agree? This should be the receivable at 415. Even though we're never going to see 8,600 of it. But I don't think that's part of an inventory loss. I think that's going to be a bad debt. Okay? You got to try to convince them to pay you even though you lost your records. It's kind of crazy they wouldn't. But what are we down to? 28,000 in here? And somehow it needs to get back up to 54. What's the debit to accounts receivable between March 31st and April 15th? 14 plus 12, is that right? 26,000? Does that do it? Okay. Is that the sale they had? 26,000? What's 135 and 26? 161? Is that the sales they took times their cost of goods sold percentage? Down below, they don't give you any more information to help, I don't think. So this is 161,000. What else do we need then? this number, right? You need your cost of goods sold percentage, don't you? What would you do to get that? It said they think that it would be appropriate to use the overall gross profit rate for the past 2 years. So what would you do with that one? How about get your sales and your cost of goods sold? Therefore, my gross profit for each year, 2014, 2013, and add them together. They said in total, right? So all you really got to do is get it in total. So what are my sales? 530, 390. What does that total to? 920, guys? Sound good? What's the cost of goods sold? Beginning inventory plus purchases less ending inventory. Is that right? What do you get for 2014? 280 plus 50 less 25. Is that right? How much is that? 255? You guys aren't helping me. Doing the math right?
Yeah.
Okay. What's 530 less 255? You don't really have to calculate that. You can just do it in total, but it's all right. What's 275 divided by 530? What was that? 51.9% about. Okay. And then this one over here is 390 of sales, 235 purchases added to the 66 beginning inventory less the 50, right? So it's 16 plus 235, is that right? $251. 390 less 251 is 149? 139. Is that right? 139 divided by 390 is how much? Boy, their sales went way up in there. 30.6? 35.6. My gosh, they're just bouncing all over the place. The margin was horrible. It's kind of hard to think what. Okay, then 255 plus 251 is how much?
506.
506. 506 away from 920 is how much? 414. And what we really need is that relationship. You didn't have to do these two. I just think it's funny. Right? Problems. Really arbitrary, isn't it? Okay, so what's 414 less 920? Or divided by 920? 45 even? That's the one we wanted. Okay, so then 45% times our sales of 161 should give us our cost of goods sold. Would you guys agree with that? Whoops. That's our gross profit percentage. I want the cost percentage. What's the cost percentage? You know, if 45, if 45% is the gross profit percentage, what's the cost percentage? Relationship between those two is 55%, of course, right? 100% is the sales price, 45% is the gross profit. It's 55%, right? So the cost is 55%. So take 55% times 161, and what do we get? 161 is what we thought the sales were. Times 55%. 88.5. 550. Okay, good. And then what's our purchases? 52,000 plus 15,600 plus 3,400 less 950. Did we pick up all the pieces? Anything we left out? What would that be? $950 was returned, right? Okay, 52,000. We bought 15,600 more, and then there was 3,400 that we bought, paid for, both, right? How much is all that? Got the slow moving today. Be interested to see how close we are to the author's answer. What I left out. What do you get, guys? 70,050. Okay. So we got 75 to begin with. We think we bought 70,050, and then we think we sold 88,550. So what do we think should have been on hand for inventory? Including what's in the truck on the way to us. Right? What do we think should be there?
56,500.
56,500. So if we think 56,500 is what we should have, and what we do have is 3,500 that we recovered, plus 2,300 that's in the truck on the way to us still, right? I guess. What's the difference between those two? Should be my loss. How much is that? 50,700? What'd they say the loss was? 50,700? Yeah, okay. Yeah, I think I probably would have screwed up that 2,300 unless I just happened to see it going on out. Is that how far you out? We're out to?
Yeah, I wasn't, cause I thought it had something to do with like the ownership and I was just.
Yeah,
doing
but it,
now I
yeah, it
can-
has to occur to you, you still have it.
Yeah.
It's gonna show up, so you didn't lose that. Cool. Could you do something like this? This is pretty tough, but it's a good problem. Okay. So enough? There's more in the review.
What time is the review again?
2 to 3, I guess.
3.
No, wait a minute, that's 101. Sorry. That's 101 on Wednesday. Ours was set for 2 to 4.
Wait, do we not have one today?
Yeah, ours is set for 2 to 4 today. And you can come at 2, so 2's good. A few of you are going to show up, and we'll stay as long as we stay. That'll be fine. We can take 2 hours if it's correct. Sorry, no problem. A couple of you still haven't given me the quiz score that I lost. You took it. If you didn't take it, it's cool. You got it with you?
Did you ever get that information from your daughter?
No, I have not heard back from her yet. Well, I haven't. Actually, he will email me when he gets it done. So I'll be seeing her to the city town for a while. So I'll see if we get it for her before she gets done. Get him to get it to us. Oh yeah, you want to get that one for us? What? Somehow I lost it.
Yeah, I'm gonna go and get one.
Quiz 6, Jeff. Good, good. All right.
You know, so the program came in,
Should I grade another one?
I think I might go outside and grade today.